I used to tell people that valuation, startup valuation is a puzzle. It's a puzzle that someone, somewhere, right now, needs to crack, right? Because, of course, yeah, he's going to crack it for us. And we try as much as possible to bring the two, someone from the investor side and someone who have actually raised a lot of fund to become a unicorn into this discussion so that they can, demystify it from two different sides of the sofa. So I have some questions here. This is how we're going to do it. I'm going to throw questions to, of course, I won't ask you guys the same question because you're coming from different backgrounds. So I will just ask different questions. Throw one to you. We have about 35 minutes for this, 30 minutes for discussion, then 5 minutes for Q&A. So I'll just go right into it. No introduction. I don't like long talks. Yeah. So, Ido, this is to you. How do you think about valuing startups? And how do you think about investing in them?
Sure. So thanks, everyone, and thanks for hosting. I think the way for us is fairly simple and simplistic, though not super trivial. So the way for us to think about what makes sense for us as a fund is very easy. We need every single investment to be a potential fund returner, if everything works. Now, usually not everything works, but if everything works at the gate, and for a fund of our size, which is 150 million, that means that our share at exit should be worth roughly 100 to 150 million US dollars. So if we plan to have anything between 5 and 20% ownership, let's say 5 to 15 at exit, we need to think through how many more rounds, what are the capital requirements, and so on. All this goes into a model, and then we say, okay, this can be worth, $1 billion, 2 billion, 3 billion, whatever the number is, and our stake is a potential fund returner, so that's interesting. Now comes the question, what is the value of the company now? And again, if we would like to target, say, for Series A company, 10x return, the value at exit divided by 10 roughly gives us the post-money of now, money minus the money in, that's the pre-money. Now, of course, there is market, and there are other people putting term sheets and so on, so there are lots of things coming into this dynamic, but when we think about it as value at exit, which we have our ways to calculate and think through, and it's much more art than a science, and we're usually, precisely wrong, but trying to be vaguely right. Divided by our potential return, that gives us the post-money of the round in which we enter.
All right. I'll come back to you. So, Kara, yeah. I said I'm going to be calling you Kara. Are you fine with that?
Everybody calls me Kara. So you got it right on the first time.
Oh, makes sense. Thank you. So you come from a unicorn, right?
Yeah.
You are from the unicorn again. Yeah.
Is this a place?
So, yeah, we need to say that. So Africa as a whole, in total, has 6 unicorns, right?
Yep.
And Wave is one of them, worth about 1.7 billion. Probably maybe worth more now.
Yeah,
Well, the last valuation was 1.7 billion. So what would you say is the value that you actually bring to the table to be worth that amount of money?
Okay, thank you for the question. Basically, one of the most important things as a startup is to solve a problem, basically. The bigger the problem, the better. And that's where we started. We started by identifying one problem, and we wanted to tackle, that was financial inclusion. We saw that one of the ways to tackle it was through digital finance products. And we launched Wave after 2 years on the ground, 2 years in the field, 2 years in markets, in in fields. We were working with fishermen, and we spent a lot of time trying to figure out the problem we wanted to tackle. And once we had enough feedbacks, enough data from our future users, we built the first iteration of the product. And then we went back to the field. So we went back to have them try to get their feedbacks and improve the product. And we did the same thing again and again and again. So the first thing is to know the problem that you are tackling. The second thing is to focus on the execution. I think Tidjane mentioned it. That's probably the area where we are the best. We started small. We get our hand dirty, and we spent 2 years just preparing what everybody is seeing now. And after 2 years, when we launched, with no marketing, we reached 1 million active users in less than a year. So for me, it's really important to start with the basics. What problem are you trying to solve, and to put in the work. You really need to put in the work.
All right. Thank you very much, Kara. So back to you, to Ido. So thank you for giving us just a prerequisite of how you invest in startups. So I'd like to also know, do you invest, like, what do you value more? Do you value the product more or the founders building the product? Because I think, of course, yeah, I don't know if you are up to that Silicon Valley level yet, because Silicon Valley mostly value, like, the back founders. The back founders. You see somebody building a product where an app where you can walk your dog, and is raising about $100 million. But it's actually because of the person building it. I don't know. So do you value, or do you back founders, or you back products? How?
I'd say, we back founders, period. Of course, there is difference between rounds, so we're Series Seed to Series B investors. We've been the first check in a bunch of our portfolio companies in which there was hardly any product, or there was no product. And we have been backers of slightly later stage companies where, if you're entering at Series B and there is still no product market fit, there might be a problem with the founders, not just with the product. But with that said, and I think Tidjane alluded to it earlier, the key differentiator for us is the depth of the founding team about the problem they're solving. So I'm seeing now, I don't know, probably 50 SME lenders a quarter, or more. We're seeing roughly 400, 500 companies a quarter right now, of which I'd say, 10% are easily in SME lending, a lot are in consumer finance, a lot are in remittance. I'm 80% of the time hearing the same pitch, which is on average fairly shallow. The basics we know, Africa is big, we know people are poor, we know people are not banked, we know, even my mother knows. Now the question is, what do you know that I don't know, and more so, what do you know that the competitors don't know? So that ties back to the depth of the founding team on the problem, which then is translated into the product. The product will change and evolve many, many times, but it's really about the ability of a team to get this depth and this differentiation and understanding of the problem they solve. This is what we're always trying to search for.
All right, thank you. So I'll just come back to your follow-up questions on that. So for instance, because mostly these days we live in tech, we live on the internet, and you would find out that somebody who's just coming out of the university is building a product. No prior experience about fintech, they just know how to code, right? So when they build this product is solid. You see that this product is actually solving very, very important, but they don't have experience in the field, but they have this technical skills that they could really build. So how do you advise them? So how do you, is there a trade-off?
people who believe that in my view, it's a personal view, that in Africa you can build a company solely on tech and IP with no market understanding, I don't see the value in their company. The level of tech on average is mediocre. The engineers are on average not as good as in some of the top markets in the world. The level of universities here is not as good.
Hold on.
Yeah.
Hold on. That's a problem.
On average, again, there are
On
tremendous,
average.
there are
Okay.
tremendous people everywhere. On average, okay, average against average, not best against best. The best are the best. Average against average, when you're building large teams, you will hit average at some point. Okay, are not yet as good because the education system here is not yet as good. It's a given. It's not my view.
Yeah.
So under this, the difference is on business model and on execution. Okay, great. By the way, the greatest, or a lot of the greatest tech companies built globally in the last few years are not about the strength of their IP. If you look at Uber, at Airbnb, on a lot of the social media and so on and so forth, it's not about just the depth of the technology. It's also about how they went to market, how they captured market share, how they defended from competition. So I think it is great to see early graduates starting businesses. We're very happy to back them, but they must understand that this is a prerequisite to also learn the area in which they go, and not just say, okay, I can build an app that is better than the app that I'm already using. Better at what? Better for whom? What is the value proposition exactly versus competition that will either be cheaper or bring more value? These are the only two strategies that win in a market.
Great. I'm still going to come back to you, but let me quickly rush to you, Kara. So, Kara, congratulations for the e-money license.
Thank you. Man. Thank you.
Yeah,
Appreciate it.
congratulations.
It was a long time coming.
Yeah. Yeah. So, we're still talking about foundation and sustainability. Wave is already a unicorn, right? You've already attained that unicorn status, right?
Yep.
In valuation. And there's still a lot of things to do, a lot of licenses to obtain, a lot of markets to expand
Absolutely.
into. So what would you're taking on the giants in the market, right? The Orange, the Free, taking on all of these guys in the market. They are telcos, of course. And you come from, pardon me to say, nowhere.
Absolutely. You can say it.
To just put pressure, mount pressure on this guy. You use pricing strategy to kill them off. I think 1%, that's what you take on your transaction fee?
Yes, but they align to that. So
Okay.
we are bringing more to the table.
You're bringing more products to the table that you charge more?
No, actually, basically we are bringing more value on the table.
Okay.
Because right now, we are not the cheapest in Senegal right now.
Okay.
One of our competitors is even cheaper than us.
But you were cheaper. You were the cheapest.
Yeah, but they adapt. And despite them adapting, we are still growing. So it's not about the pricing. It's about the value you're bringing to people.
Okay.
And right now, when people talk about Wave, they don't talk about just a product they use. They talk about the product they love. And that is the big difference a lot of people are failing to understand right now. Our product is designed to be exactly what people are expecting, or even better. Myself, I've been impressed, and I'm still impressed by the amount of work we put in the design of the product. We have product we could have launched a year ago, and they would have topped everything that is in the market right now. But as a business developer, at first it was kind of frustrating because I knew that we had a product that was better than everything in the market. But we have really high standards for our product, and we are expecting to meet those standards every time. So we did not launch those products, and they are still not launched to this day. So it's important to to bring value. It's important to understand what people are expecting. It's important to give them good
All right,
support.
all right, hold on, Chito. So,
No.
you said it's not about the price, it's about the product, the value that you bring
Absolutely.
to the table. Are you sure that is in the African market? Are you sure it's about the value and not the price? Because, sorry, Wave is a mass product. You
Absolutely.
build Wave for the mass market.
Mhm.
And if you're building for the mass market, you need to think about the pricing more than any other thing. I think, yeah, of course, your product has to be solid.
Yeah.
But are you sure that it's not about the pricing? Because I remember, that what really make Wave bank is that the pricing was so down that anybody could afford it. I mean, Orange was charging as high as, you tell me.
Yeah.
Free was charging as high as, you tell me.
Mhm.
But Wave came to the market and they brought the pricing down to 1%. And everybody was rushing to Wave. So if you tell me that it's not about the pricing, it's about the value, I think we need to talk about that.
That's easy to lure people with really cheap prices. What's hard is keeping them.
Okay.
I repeat, that's really easy to say, okay, this product is free, everybody stop using what you're using right now, come use Wave.
Okay.
But if the product was not excellent, if the support was not like the best one they had in this with this type of products, like a few weeks after that, they would have went back to
Okay.
what they were using.
Okay, I get you. You use pricing to bring people to the table, then you use value to keep them.
Yeah.
Right, great. We can agree on that. So back to you, though. There's a very interesting thing going on in the venture capital world right now. We have a lot of venture capitalists sort of like revaluing their investments in startup. For instance, Tiger Global was like, hey, we invest a lot of money in growth stage startup. And when these guys go to IPO, they mess up big time, right? Pardon my French. So they are sort of like revaluing how do we invest. Okay, let's put a lot of money in early stage startups. What do you think is the impact on the African ecosystem? Like, do you think this is good that the big guys are sort of like revaluing their investments in the growth, now bringing money to the early stage? And when you think about early stage, you think about Africa actually. And of course, we have a lot of.
I think this is a very partial context of a much larger discussion. So, in contrast to what some of the people in the ecosystem think, the world didn't start in 2015. So there were a few years before 2015. And in those years, there were cycles. So we had the bust in 2000, in which some of us were adults, and the bust in '08, and there were a few more bumps on the road. And that will keep happening. We went into a market in the years where it was sort of a one-direction market. And especially in 20 and 21, when money was basically free. Okay, you had most of the money in Europe sitting on negative interest, which meant that people just had to deploy it somewhere, because if they didn't, they were losing money on their money they own already. That pushed valuations in public markets extremely high. And a lot of this, fortunately or unfortunately, depends which side you take. I don't think there's a right or wrong here. That is starting to show as not extremely sustainable. Now, I'm not saying that it will not be, I think again, it's cyclical. So if you take a very long-term view, it shouldn't really matter if the fundamentals are good. But if you're trying to race to valuations and just to top-line growth to achieve valuations, that's a little bit damaging, because the market in the last 3 months had said, oh, top line is interesting, but what about bottom line? What about unit economics? What about gross margins? What about EBITDA margins, free cash flows? All those things that we sort of forgot to speak about for a bunch of years. Now, the fact that the Tigers are saying towards the outside, oh, we will take our 12 billion, we won't do late stage, we only do early stage. Nice to say, it doesn't work in reality, because you have nowhere to deploy it, and it still needs to exit at some point. So you'll just inflate it earlier. I think that we will need to go into a couple of years of a little bit more rational allocation and really looking in depth about business models. There were a series of blow-ups now in India with a couple of fintech unicorns. If you had followed, we're seeing a couple in our continent, about not chasing the right things, let's put it this way. I think it's a good fix for all of us. I think, again, very long-term valuations will keep going up. Very good companies will be created. We're here, we have a 10-year vision, a 20-year vision, and so on. For us as a fund, we see it as a very long-term play. But in the very short term, this pressure will translate potentially, and we're already seeing it, and I know if people in the room are feeling it, lower valuations at Series Seed, A, and B that are pressed from above.
All right, thank you. So have like two vain questions, actually. So one is, if you had your money in Netflix right now, will it put you out? Are you going to pull it out in Netflix right now? Just to break the ice. Then secondly, we mentioned Kobo 360, Seamless HR, ULesson. Which of these startups would you push for IPO?
At this point, all of them, and I think that all of them, are in very different ways, are very early in their journeys, and a lot is still ahead of them, and a lot of growth, and I think they're all in tremendously interesting spaces and are sitting on very interesting business models and very deep understanding of the markets. As for Netflix, though, I'm not a public market investor.
Yeah.
Right now, today, I think Netflix is a very big problem. The economics of the model don't work well. I have not enough depth on this sector in the US to know whether the ad models will work or not. My guess, long term, they will fix it. It's going to suffer for a few years. Yeah. So if you're, again, a short to mid-term investor, not great. If you're long term and believe in management, they may be able to fix it. It may be a good time to enter. Honestly, no real idea.
All right, great. Thank you for that. I think we have about 2 more minutes before we go into Q&A session. Am I correct? Is anybody looking at the...
Yes, you are.
Great. So yeah, we've already established the fact that you come into the market with good pricing. Then when you attract more customers, they become loyal. Then you start, of course, you turn them with value. Like, you retain them with value.
Yeah.
All right. So what do you think so I got into Senegal yesterday, and cash was I could not even buy food because I had dollars on me, and there was no way to change, and the people were not accepting dollars. It's like, did you do mobile money? They're like, no, I don't do mobile. I don't like Orange. I don't like a Wave. I like my money. I like to keep my money.
Somebody say, I don't like Wave?
Somebody said it. He said, I don't even go to the bank. I was like, bro, he said, yes, I like to keep my money. It's just like that, just few steps away, and like, okay, this is a story. There's a story right here. So do you think you've actually done an incredible job as a unicorn with your incentive, with your products, your pricing, to turn these people, or you're just getting started? In Senegal, not talking about new markets.
Actually, the unicorn thing is just a label. It doesn't really change the way we think about our business. The real problem, I think you touched something really interesting here, and that is the way we see our ecosystem. We are not trying to be better than, we were not trying to be better than Free or Orange Money or MTN or else. The real problem here is the cash. Those are not our competition. The real competition is the cash. It is so easy to do a transaction in cash. So you need to build a product good enough to have to match that level of UX. And that is something we've been working on for a while now. And hopefully, for the time you are in Senegal, just work around and you will see that you will be able to pay with Wave with a lot of merchants. And that is something we've been focusing for a while, and we always had the same approach. We start small, we test, we improve, we iterate. We've been doing it for months, and right now we think that we are close to crack it. And we see the
You haven't
numbers.
cracked it yet. Thank you for saying
No,
that.
no, 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 no. We just started, actually.
Great.
And that's the cool thing about the license. We did everything we achieved with one hand, actually. The other one was behind our back. Now it's untied. Now we can start.
I mean, shout out to EcoBank, Nigerian EcoBank, and Nigerian UBA.
They did some awesome job, and we really liked having them as partners.
Great, great. Thank you for that. So Wave, you haven't cracked it, but you are going to crack it.
Hopefully, yeah.
Yeah. And also, Unicorn, you said is a label. That's the way you see it. People outside don't see it as just a label. It's a big deal.
Yeah.
We only have 6. Indian has, I think, 96 unicorns. Just one country, 96 unicorn. And the whole of Africa has just 6. So it's a big deal. It's going to help us, push the hype and push
The bigger
ecosystem.
deal is the life of the people we are impacting. And when you meet somebody who told you that I used to pay like this amount to do a transfer, now I'm saving 75% of it, that is a big deal.
Great, yeah. 2 big deal can coexist. All right, so I think I'm going to save my own question for Ido for later. I'll just push it to the audience. If you have questions you want to ask Ido or Kara, you can just quickly, I think we're going to take 2 or 3 questions, then we'll round up. Okay. All right.
Bonjour. Can I express myself in French?
Sure.
Thanks.
Oui, bien sûr.
Félicitations à vous, Monsieur Badian, pour Wave, parce qu'on
Merci.
a observé sur le marché que vous êtes devenu émetteur de monnaie électronique. Je me présente, je suis Habib Diallo. Je suis expert financier à l'Observatoire de la qualité des services financiers pour le compte du ministère des Finances et du Budget. Et ce que je trouve intéressant dans votre expérience, c'est très inspirant. Et j'aimerais savoir, en termes d'expérience, puisque vous dites que Wave a commencé dans le underground avec beaucoup d'enquêtes pilotes, avec différentes cibles. Ça suppose que vous ayez des investisseurs derrière ou des fonds pour pouvoir travailler 2 à 3 ans sans make money. Quelles sont les voies et moyens que vous pourrez conseiller à un jeune entrepreneur aujourd'hui qui est dans la tech et qui n'a pas forcément cette ressource pour pouvoir faire comme vous dans le futur? Ça, c'est la première question. Hi, Mr. Sam. Can I express myself in French?
We can try.
Okay, English is better.
I'll do my best with French.
Regarding to the landscape of what you say, is very difficult to have a value of a company in Africa. And actually, our government, especially my department, is working in financial education program for the numeric. And do you think this kind of solution can be a very good leverage for you and the VCs to invest in fintech in Senegal? Because we have another problem that's on the regulation, because the central banks is now working on the regulation. So they already create a committee in the bank central, and they are now working on it. Regarding to what say Tijan working in Google, 1 to 3 of what attract the VCs today is investing in fintech companies. Thank you.
Ok. Je vais commencer. Merci beaucoup, c'est une excellente question. Je vais essayer d'y répondre le mieux possible. Être entrepreneur est un challenge. Être entrepreneur dans nos marchés est un challenge encore plus grand. Parce que on ne se demande pas seulement si on va réussir ou échouer, on se demande si mon entreprise va survivre encore 6 mois, 7 mois, 8 mois. Les entrepreneurs font des sacrifices, c'est pareil partout. Et dans un marché comme le Sénégal, que je maîtrise mieux, mais dans nos marchés émergents de manière générale, il faut toujours qu'il y ait des gens qui aient ce courage de faire ce sacrifice. Il faut toujours qu'il y ait des gens qui identifient un problème et qui soient assez inspirés par le fait de le régler pour se dire, OK, je vais dédier mon temps, mon argent, ma vie sociale, et je vais m'investir à fond dans cette expérience sans savoir à 100% si elle va réussir ou pas. Mais je le sens dans mes tripes et je suis prêt à faire ce qu'il faut comme sacrifice. Donc cette envie-là est importante, c'est le début. Après, une fois que tu as cette envie, bien sûr, il faut des fonds, il faut des ressources. C'est pareil un peu partout, il faut démarrer par ses fonds propres, aussi menus soient-ils. Il faut démarrer par le love money, mon frère, ma soeur, mon oncle, etc. Et on a autour de nous cette capacité à lever ne serait-ce qu'un petit capital pour démarrer. Il y a toujours des grants, il y a toujours des concours, etc. Mais déjà, utiliser son propre argent et le love money peut être un bon départ. Après, ce sera difficile. Et je vois des entrepreneurs dans cette salle qui sont restés des années sans salaire, dans des situations compliquées. Mais aujourd'hui, ils y sont arrivés. Aujourd'hui, ils ont réussi à tirer leur réussite de ces sacrifices, de ces nuits compliquées, de ces journées compliquées, etc. Donc, c'est possible. C'est plus facile quand on a réussi à avoir du own money, du love money. Wave a commencé comme ça. Aujourd'hui, comme Tidjane l'a dit, on a de plus en plus d'investisseurs qui sont prêts à mettre de l'argent au niveau du site. C'est-à-dire que cette période compliquée pourrait être de moins en moins longue et c'est vraiment quelque chose qui nous fait plaisir.
All right, Kara, thanks. I think you have a question for, so you could just briefly answer
Sure.
that.
If I understood correctly, is what role can government play in help VCs come and invest in fintech in Senegal? I think there is no real expectation from VCs for government to be welcoming them specifically. I think the largest area or the space in which you can help is the more clarity local companies have on the regulation and frameworks, not just in present, but also going forward, is something that helps a lot investors like ourselves and others to gain some level of confidence that not overnight, you shut down crypto or you open up new line of licenses or whatnot, because these things shake business models quite heavily, and predictability with regulation is something that is extremely meaningful in the space we're in. Of course, we're always building for a changing world, but some clarity helps.
All right, thanks, Ido. So
I
think
have.
we have, please,
Yeah, I'll ask the next question if you don't mind.
All right.
Just be given the title of the panel, right? Race to valuation versus sustainable business development. Let's talk about the elephant in the room, Flutterwave. The entire VC community has been in a bit of a shock these last few weeks following the investigative journalism report that came out with some allegations. Right or wrong, the topic here is not to discuss that, but given Flutterwave's meteoric rise in terms of valuation, going from 0 to 3 billion in the space of 4 years, and apparently some governance issue at the core of the ongoing elements that are being disclosed. And I would like to hear Ido's view on that, because I know how experienced he is. What do you think is the responsibility of the VC industry, which maybe has missed a couple of DD elements there, in terms of first learning from that, and especially at a time where we're doing a lot of safe notes in the industry, where we have no direct equity investment, so governance maybe is a bit left on the side, maybe we're not looking at that in a DD side. How do we make sure we don't have a 10, 20 big situations like that that are going to undermine our industry?
I'll say this. First, I'm not an investor in Flutterwave, which may be good or very bad, because they may, end up being a great, the great company we all hope they are. So I have no specific or insights on the company. I'd rather not discuss things I don't know in detail. I would say that we are seeing, and that is again a point made earlier today, a lot of foreign money coming in the neighborhood of 85%, I think, of total money last year is foreign, and a lot of it comes with very loose processes, let's put it this way. It is an index type investing at times, which says we buy the index, we buy the vertical globally, and hence we don't really care who wins because they will buy each other. And that allows for shorter due diligence processes, which I think don't serve any of us, and also allows to very loose boards. I have sat on boards and was present on boards where, the US style now is we don't do a summary for the board because the lawyers advise that we rather not have anything in writing. So the minutes are, we met. And I think that this style is not right for us. I know it's very fashionable today to have no board at seed, to oppose, any ability of governance until Series Z, and so on. But I think that the more experienced founders do understand that it will help them in the long term. It does buy the confidence of the right set of the tier one global investors, not just the index fund, but the actual top tier VCs that would like to rely on local due diligence when they come in, and we've seen that time and time again. So my advice is, and it's a two-way street, which I always come back to. When you're bringing investors into your cap table and you always want as founders the shortest possible route, remember that you're now stuck with us or with whoever that may be for 7 to 10 years. It's quite a lot of time to be seeing my face every week. So if you don't like me, go work with someone else. Take this time of due diligence to learn about your potential investors and choose the people you believe can help you with their networks, with their experience, with whatever. And that ties back to governance. And the board is not just there to say this is right, this is wrong. That's really not the role. The role is to be supportive partners in one of the loneliest journeys on earth, which is the journey of a founder or a founding team. Being an entrepreneur is extremely lonely, very few people to consult with. Choose the people you want to work with and put governance in place in order for those people to be your echo chamber, your support system, your thought partners, and look at it like that. That is what I have to say about this.
All right, so we can just take the woman over there. Thank you.
Thank you very much. My name is Maimouna Dia. I am a CEO of Centrus. I want to ask one question for Mr. Badian. Congratulations, Mr. Badian, because you are very happy to see your business is closed. My question is, now I see that you are an agreement of a bank, a central bank. I think that I ask you if that's a good idea, because when I see the service of the web service and the model economic of web and your agility and all the content we can see to the bank, you must respect all these content. That's a good idea to become a bank or to have an agreement of bank, a central bank. Thank you.
Okay. Thank you so much for the question. Actually, the license we have is an electronic money issuer license. It's different from a banking license. So the license we have is much more adapted to what we do. For some services like, I don't know, microloans, or if you want to launch a Visa card, etc., we will have to work with banks because we are doing two separate things. But regarding the EMI itself, it's a really positive thing for us. Because first, in terms of credibility, it confirms that we are now strong enough to be considered to have a seat on the table. It confirms that our financial model is sustainable. It has been questioned, I think, a couple of times, and I can assure you that the central bank do not give license if they are not sure that the model is sustainable. Right now in Senegal, it's 6 million people who are using Wave on a monthly basis. If we are given the license without checking like all the financials, etc., it is putting the ecosystem, I mean the economy of Senegal and of the zone at risk. So they did their due diligence. It took a lot of time, but now we are in the clear. So it's a good thing. We will be able to launch more products to bring more value to our users, maybe lower prices.
That's very important.
But yeah, it's a positive thing, and we are really excited, and we hope to have it not just for Senegal, but have it in Côte d'Ivoire, Mali, Burkina, and all the other markets we'll be launching. So,
Right.
I just want to, one very, very last point to the question I was asked before to the investors in the room. We do have a role in these situations to be extremely responsible for the money we manage, not just because we took fiduciary duty on it, but because the only way to move from the 4 or 5 billion this year to the 30 will be to bring the real global institutions to this continent. And the only way that will be built is on a lot of trust in our ability to have good judgment and react in real time and be true to ourselves on the decision we make and how we help drive the building of companies. Again, we're supporters and partners to the founders, but it is our role to play this governance piece in those journeys. So just to be very clear on that.
All right. Thank you very much, Ido and Kara, for this amazing panel. I think we've come to the end of this panel. Thank you guys for listening to us.